What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Linder. Happy Monday out there. Hope you guys had a good weekend. Recovering from the Bitcoin spike, a little bit of a hangover from last week into this week. We're going to cover the price. We're going to go over all the fundamentals because today is Monday. It's the Bitcoin Fundamentals Report Day. Let me share my screen and jump right into it. Bitcoinandmarkets.com, where you go to get all of my content. And we'll click into the fundamentals report here. Zoom in. So big week last week. I've kind of felt like there was an adrenaline dump here today. Price went down a little bit, but we will take a look at the live charts. You can go into the most comprehensive newsletter, any part you want to. Quick navigation links here. You can support the show if you'd like to. $5 a month goes a long way. Okay, snapshot of Bitcoin right up front here. Weekly trend, consolidation after a rip. So we went very high, very fast. And of course, we were going to have a consolidation. Now, I thought that the consolidation path that we've taken has been a little bit different than I thought it was going to be, but we will take a look at my prediction and where we are in relation to that. Pretty much there is zero damage done. We've just kind of returned to the line where I thought we were going to grind higher in a little bit slower fashion. We did make that run to 100K. Now we're pulling back from that. But overall, this is still very, very healthy consolidation after a very large move in price. Media sentiment is very positive. Network traffic, stable. We'll take a look at the mempool and the fees and all of that. Hash rate, difficulty. Mining industry, though, as a whole is lagging price. They really didn't, price moved, what was it, like 30% in a couple weeks. And the hash rate did not really move much yet. So that is lagging still. Price section. So at the time of writing, it was 94,942. That has, I just saw it came down. I think it's down into the 93,000 level. But we will take a look at the live chart here in a second. Market cap at the time of writing was 1.878 trillion Satoshis per dollar. 1053 and one finny, my preferred denomination of Bitcoin, was $9.49. You can see that's a very nice round decimal place, and at $10 it's 100K. At $1 million, a finny is $100. So I hope that catches on. Mining sector, previous difficulty adjustment was last Monday, and it was 0.6%. Right now, it's estimated to be a plus 3% in 6 days, but we will see where that ends up. Mempool, 95 megabytes, down about 10 megabytes from last week. And I'll go into some of my interpretation of what's going on chain in the mempool and what this spike to 100,000, and we kind of use a holistic way of analyzing this, what I'm seeing in what the mempool is telling us. Fees for the next block under $1.67. That's 5 sats per virtual byte. Low priority fee. You can save a dime and wait an hour for 50 cents. Lightning Network. So capacity continues to increase. This is in BTC terms as well. So in dollar terms, it is also rising very rapidly, but channels are going down. So this has been the trend now for the last few weeks. More capacity in BTC, but fewer channels overall. All right, let's get into the headlines. Everything has been about MicroStrategy this week. You can't go 2 tweets. Every other tweet on my feed, at least, is about MicroStrategy. So I said 90% of this week's news cycle is about MicroStrategy. This week's updates reveal they've purchased. So they just had another update today where they purchased another $5.4 billion worth of Bitcoin. So that's a total of $12 billion in the last 3 weeks alone. $12 billion for one company in the last 3 weeks. And they're getting bigger. 2 billion, 4.6, now 5.4. Pretty soon we're going to see a $10 billion buy from MicroStrategy, which is pretty crazy. You probably are following Michael Saylor, but if you're not, you can follow him and get the most accurate updates on everything that they're doing. Their treasury asset, or sorry, their treasury balance measures the price. Mirrors the price chart. And this was a good one from Ecoinometrics. And let me just make this fit the screen. So you can see over the last 3 weeks, just boom, 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 boom. No wonder why their stock price is going crazy. Their treasury is exploding to the upside. All right. This was the recent pullback on the price. I didn't check it after, I don't know, when I did this about noon or so. So 25% pullback is healthy, especially after going 700% year to date. So I don't think this is going to crash anytime soon. It's just going to consolidate and move higher in the next leg, but we will see what comes in the future. They're just accelerating their strategy right now. People are still confused about how this isn't a giant Ponzi scheme. I've had pushback on Twitter from anonymous accounts, Anons, those great Anons, claiming that this strategy will collapse if the price dips. However, they have a very low leverage strategy. Estimates for MicroStrategy before today's update was that they had a net debt of about $4 billion on a total amount of assets, 30 billion or 32 billion. It's depending on which day you value those assets. But I mean, that's not over leveraged by any stretch of the imagination. And everything is transparent. So the bad thing is when it's secretive, when people are getting most likely, applying 2, 3, 4, 5x leverage to their total assets and not being public about it, right? Because they're not a public company. This is all on the up and up, and it's very low leverage, all things considered. The amount of pushback tells me that this rally has more room to go before people's resistance is broken. And only then will it mark a major top. So as long as people are fighting this as a Ponzi, it's probably going to continue to go higher and higher. Only when they stop talking about it, or when they, finally give in and they get FOMO and they buy some MicroStrategy, will it have a major top. I'll monitor it closely. And I do expect it to retest the highs this week or next. I mean, it could be 2 weeks down the road, but this is far from over. This kind of dip, a 25% dip, is something to be bought, in my opinion. So not financial advice. Okay, next section here is ETFs continue to stack Bitcoin. This is my chart that I've been tracking for a long time. You can see the blue is the total net inflows, and it's just accelerating to the top side, just like price. Price is finally catching up, because if you go back here to the March high in price and you look at the assets, right? The assets only really went up during this whole consolidation period. And because this was like at 12 billion, by the time it broke those previous levels from March, it was all the way up here, double what it was back at the March high. So there's a long way for this price to catch up to representing this total amount of inflows from the ETF. With all the attention on MicroStrategy, many are overlooking the stacking happening via ETFs and other large players. There's other players out there that are stacking on different exchanges. They're being tracked by different accounts on Twitter. Arkham is probably tracking some of these large players, and there is quite a bit of accumulation happening other than MicroStrategy. So Checkmatey on Twitter has estimated that MicroStrategy is buying to account for only 10 to 15% of the total buying activity. The ETFs just passed 30 billion in net inflows since their launch. This has far surpassed the second best ETF launch in history, which I don't even know what it was anymore. We tracked it when it passed it originally. I think it was like 4 billion, maybe 4 billion in the first year. And this is just so far and away above any other type of financial product launch ever that it's rewriting the textbook. So pre-launch estimates from industry professionals, so from Bitcoiners and ETF experts. All those predictions centered around $10 billion of inflows in the first year. I think some of them might have gone up to 20, but around 10 to 20 billion in the first year. And of course, now we are 3x that number with 2 months to go before a 1 year anniversary, and the rates are just the inflow is just accelerating here. So I wouldn't be surprised if we see 50 billion by January 11th, the 1 year anniversary. So it just keeps accelerating, and eventually price is going to go bonkers here. All right, Bitcoin options begin trading. Part of the reason for the recent acceleration in ETF holdings is the approval of options trading. We've been waiting for this because of the impact of negative gamma and other unique characteristics that can create a melt up in price. And we've gone over that multiple times here on the show. Here is the first day of trading contracts showing the predicted volatility smile. And you can find this from Jeff Park on Twitter in this tweet right here. So that's it for that. As price goes up, the market makers, so options are, yes, there's a buyer and a seller, but usually one side is more popular than the other side, right? And so that's going to be a market maker. And those people aren't betting on the price. So if you're buying a call option, betting that the price will go higher, somebody has to sell it to you. They have to sell you the put side. And they don't want to really bet that the price of Bitcoin is going down. They want to have a neutral trade, and all they're doing is making the fees, basically. So they have to hedge that, and they hedge that by buying the opposite side. So they'll buy the Bitcoin, or in this case, ETF shares, to hedge their market making activity to the downside. And the higher the price goes, the more they have to cover, the more they have to buy. So it has this melt up characteristic of a feedback loop that we haven't experienced yet. But once we start getting over 100K, we're going to start experiencing this feedback loop, as well as retail coming in, as well as MSTR just buying hand over fist. Now we also, I saw headlines today that Tether is going to start running a similar strategy probably to MicroStrategy. So, I mean, there is just billions and hundreds of billions of dollars that could flood into Bitcoin over the next, couple quarters. It could be extremely, extremely explosive. All right. Bessent in as Treasury Secretary. So this is one thing that Bitcoiners have been talking about quite a bit, speculating, wanting Howard Lutnick because he is more of a Bitcoin friendly guy. But Bessent he's not a Bitcoin enemy. He's not part of Operation Choke Point 2.0. He's not any of that. So he's actually a good pick. Let's see what I write about it. So the decision has been made to nominate Scott Bessent as Treasury Secretary instead of Bitcoin Uber bull Howard Lutnick. Bessent is still considered Bitcoin friendly, but not as bullish as Lutnick. His selection makes more sense when you consider his broader shitcoin interest. He's made positive comments about blockchain and crypto over the past year. This fits well with Trump's ties to shitcoins. While this isn't bad for Bitcoin, it's less bullish than Lutnick's potential nomination would have been. I don't have any other strong opinions at this time. Stan Druckenmiller has praised Bessent highly, saying he's the only guy I know who's not only a market participant, but very fluent and comfortable in academic circles. He has the rare combination of high IQ and high EQ. Of course, the mainstream financial press has been all over this nomination, crediting it with notable market moves, which is absurd. The nomination of Bessent is not going to cause stocks to rally and the multi-tens of trillions of dollars of a treasury market for the yields to go down. Okay. The nomination of one dude is not going to cause this. It's just kind of crazy that they would make that assessment. They claim Bessent's nomination has caused stocks to rally along with bond prices because his stance on budget cuts and gradual tariffs. Doesn't have anything to do with that. Okay, let's get into the macro and see what it does have to do with this. And sorry, before that, let me check comments. 183 people watching. What's going on, guys? If you're watching on Twitter, jump over to the YouTube or Rumble. Like, comment, subscribe over there. It's an easy place to make comments. I'm not seeing any comments down below. Put the comments if you want to ask a question, or if you want to say, hey, did you hear about this? Or, hey, have you looked at it this way? Or, Ansel, you're just completely wrong, you idiot. Put that down there as well. All right. I'm not seeing any comments. So let's continue here. Macro, the U.S. 10-year yield and path forward. So I've been talking about this chart since Thursday, or maybe it was before that on a live stream. Maybe it was even a week prior to that. But anyway, at least since last Thursday, I have been drawing this Adam and Eve. And then I put out on Friday this chart on Telegram showing the potential breakdown here. And just look at that update from today. I mean, it's following my breakdown. I don't think it's going to follow this exact path, but that's the general idea, right? And why is that? Well, okay, so I called out this last Friday. This is important because it shows that the rise in the 10-year yield was a temporary relief from the actual fundamental pressures toward lower yields. So as money gets tight, as we get closer and closer to recession, yields should fall naturally because people stop taking out loans. They tighten their belt. Those are the borrowers, and the lenders won't lend to them anyway. They are going to raise their lending standards. So credit becomes tighter and rates fall naturally. It has nothing to do with the Fed cutting rates. So those are the fundamental pressures, okay? And this rise in the 10-year has all been temporary. It's been temporary from the initial reaction to the Fed cutting rates, people, the market saying, okay, we'll give the Fed a chance. We'll be optimistic here. And then China stimulus, then Trump gets elected. So these are some optimistic things. The market gave it a shot. But now the fundamentals are starting to show themselves again, breaking down from this. Also, if you look at the 20-day moving average, it is pretty bad too. So let me bring that up. US 10-year on the daily. And I'm going to remove these drawings. But yeah, just look at that 20-day moving average. Found support, went up, found support here, but lost it, and it's coming down. This is a major break. This is a major, major break that is going to result in the yield continuing to fall, and it's going to fall into recession. So that's what we are talking about. All right. The structure of the global financial system, strained by oversaturation of debt, does not allow for more debt to successfully backstop the economy. So by adding more debt to solve a debt problem, it's not going to cause an acceleration in the economy. Okay, there is diminishing marginal returns on that debt. So you're just adding more burden. The net addition is burden. And as we go further and further down the road of debt crisis and the entire financial system being in too much debt, the more debt they add, the more deflationary it will be, because it's the burden that matters. And the burden is outpacing the benefit. All right. So the overall process, or the overall pressure, is increasingly deflationary. Rate yields will fall. While more debt may paper over a few issues, the overall pressure points towards deflation, not inflation. Yields will fall as we head into recession. Okay, so that's the 10-year. What about the dollar and the euro? The dollar is ripping and the euro is on life support. Another key aspect of this pivot, so the pivot along with the yields starting to come down after a temporary relief here. So another key aspect of this is the strengthening dollar. My macro thesis points towards lower yields and a stronger dollar, both of which came roaring back last week. We are not heading back into inflation or entering a higher inflationary period with a CPI above 3%. So I've seen some people out there, Jim Bianco's one, but there's others that say, most others say that we are in a higher CPI environment now, 3%. Is the Fed going to change their target from 2 to 3% so they can actually hit their target? It's going to be permanently higher, 3, 4, 5% CPI. But that's not at all what's going to happen. We are not heading back into inflation. We are approaching recession. And so CPI will drop below 2%. And we only need a couple months, a couple months of zero or below zero on the CPI, and we're under 2% again. So this thesis is supported by falling yields and a rising dollar, which is what we see here. Here is the dollar going back several decades. You can see the stair-step function up, which with each impending crisis, the dollar is just getting stronger. And if we zoomed out further to the left, you would see it way up top, the Asian, or this was the Plaza Accord, where the dollar was way higher, like 130 or 140. Then they purposely intervened in the market, caused the dollar to crash down here and weaken the dollar. And then the euro, and now we're stair-stepping back up. So this global financial system that we live in right now, that's changing with Bitcoin, hopefully here, but right now that we live in this, the pressure is for a higher dollar, not a weaker dollar. So inflationistas got it backwards. The euro is performing so badly that comparisons to the yen are being made. So here is the euro, new low here in 2024. You have to go back, it looks like a 2-year low. So you have to go back more than 2 years to have a similar low. And it's, it's deteriorating quickly. So we'll see if we can find some support on some trend lines or whatever. But overall, the euro is gonna, I can't believe it's this strong still, because everywhere you turn, they are, just ruining their economy. But the euro is the worst performing major currency in November. You can see of these major currencies here, the euro is down 4.2% against the dollar. It's just bad things happening there. Things are getting desperate in Europe. They've gutted their energy production and economy. And now they're trying to ban populist parties from taking power. France is trying to jail Le Pen, and Germany is seeking to ban the AfD. And they don't have any signs of quitting. And the people we'll see if they can push back against this. But the path for the European economy is lower, which means there'll be less demand for the euro, which means the path for the euro is lower. Their usage in international receipts and international invoicing is crashing. The euro is becoming a dead currency. And that's why they want a CBDC, by the way, because they think that they need to find some competitive advantage. And, if we do a CBDC, everyone will want to use our currency, which is stupid thinking as well. But there's nothing saving the euro. It's going to go away sooner or later. Okay, next topic in the macro discussion is Musk and Ramaswamy reveal the Doge blueprint to cut government spending. Their focus will be going after bloat after the Chevron deference case. So what Chevron deference is that the regulators could make their own interpretation of regulation. So when they went into a court case, they could say that this was the intention of the law. And now they can't do that anymore. They said Congress passes the laws and they intend certain things. You, Mr. Regulator, can't tell me, judge, how I should interpret the law. And that's what was happening. So a lot of this overreach from government agencies has come because they got to interpret the law. Now they're not going to do that. And Musk and Ramaswamy are going to come in here, go directly after that and say, these are all the places that you're overstepping the regulations and the bounds of the authority that Congress has granted. This will allow for sweeping cuts, all completely by the stroke of a pen. So Trump can just do an executive order and saying, this is beyond Congress's authority. We're not doing it anymore. By getting rid of extra congressional regulations, fewer employees will be needed, and they want to trim through paying for transition to the private sector. Okay, that's not very good a sentence, but they are trying, they'll downsize the number of employees. which is not as big as wasteful spending. That's the bigger thing, fraud, waste, and abuse, and just extra programs and stuff. But they will allow employees to transition to the private sector and give them a really good severance package, have all sorts of benefits for them to switch over. So anyway, those are just some of the ideas that they're talking about now of how they're going to attack this in the future. So that's really good. All right, next topic. Russia launches new intermediate range ballistic missile. So the powers that be, the globalists, they're trying everything they can to escalate this before Trump takes office. They've approved the use of long range missiles deep into Russia, which is very dangerous because they have to be targeted and launched by Americans, not Ukrainians. So it's the Americans doing the targeting and the launching. Ukrainians might be just saying, hey, hit this target. This is an open act of war. They're hoping Putin would retaliate to open full-scale war and lock Trump into it's very, right now as it stands, it's hard for Trump to come in and make a quick peace, even though he said he'd have it done in 24 hours. We have complicating circumstances like Kursk, the Kursk region still having U.S. troops on Russian soil. Also, the 4 oblasts that Russia has, were annexed in a referendum. They're not 100% occupied yet. And so if they froze the lines right now, it would be a loss in the eyes of the Russians. So there is no way right now to freeze the lines. And so that's going to make it difficult. But on top of that, if there was a escalation, then it might be really hard to stop it. But that's what they're trying to do. But instead, Russia has opened up further fronts, in my opinion. So this is just an opinion, that the Chinese that were in the Baltic, they were cutting the cables. So they are into the conflict. And North Korean troops are embedded in these target sites to say, hey, you killed 4 North Korean troops, and that opens up a wider conflict. So it's the people doing the bombing that would be opening up the wider conflict there. I doubt Putin will allow escalation to make him do something stupid when Trump is less than 2 months away. So hopefully we can get peace. They're trying to escalate it right now, so markets might be somewhat sensitive to this, but overall, the markets didn't really care about the new ICBM that launched. They didn't care about long-range strikes into Russia. So this is telling us that there is not a high geopolitical risk right now, even though it could become that. I just don't think it's there right now, and the market's telling us it's not. Okay, so that is for the macro headlines. Let's check comments real quick, see if there's any. I am live streaming on YouTube, Rumble, Twitter, and Telegram. If you're watching on Twitter, jump over to the YouTube and Rumble. BitDov says, cheers. Best analysis as always. Thank you, sir. Let me check Telegram, see if there's any comments in there. AJ. European leaders are really trying to help Biden and other globalists to start World War III. Yeah. Keir Starmer and Macron allegedly pondering sending troops to Ukraine. I've seen some things that they're floating things in the media about doing some sort of draft or something in the UK. What's my take? Will they succeed to start a more serious war? No, I don't think so. I don't think so. I don't think Putin will play into that. He'll do everything short of I don't think he'll target anything outside of Ukraine before Trump gets elected or gets into office. And I do think things will massively cool down as soon as Trump gets in. Can he end it immediately? I don't know. Russia's going to have to roll through those oblasts and take control of them. And then, we will only then will there be a chance, I think, for some sort of peace negotiations. But that's what I think. And right now, it's not really harming markets all that much. I mean, Russia's economy is doing okay. And the markets aren't telling us that there's a heightened geopolitical risk at this moment. So that's what I would say to that. Okay, let's get back into the report. Let's check the time, 5:22. Okay, price analysis. Last week I said despite this bullish potential, the base case for this week remains consolidation around the October 2023 path. Some supply between the current price and 100K may become available, and that actually happened. Okay, lots of supply came on the market. Sailor bought over $5.5 billion worth of Bitcoin, and the price actually continued to weaken. So there's a lot of supply that came on the market around this 100,000, and we've been talking about that for several months. I think that 100,000 was going to be one of these places where a lot of old school OG Bitcoiners are going to be like, okay, I need to take some of this off the market. There could also be that some OG Bitcoiners are selling their Bitcoin and then going back and buying MSTR with a little bit of leverage, So anyway, there is supply that has come on around the 100,000, but the Sailor put could prevent a significant dip, and that's what we've seen so far. A breakout could happen last week or the week up to today, and then I think it was more likely to occur this week. So that is what I said last week, just to bring you guys back up to speed. After pushing last week all the way to 99,800, price is coming back today, currently at 95,008. We have been outpacing the October 2023 path. I expect a faster consolidation period than 2023, but with the same general characteristic of a slow upward consolidation into a breakout. I think the psychological pull of 100K was too strong and price had to go test it. We should now settle into the bumpy sideways until the real breakout happens. So here's this 2023 pattern. We were really mirroring it until, late last week, ran up to 100K. That psychological pull was too strong. And now we are correcting. And actually, let's take a look at the live chart. Share this tab. 93,300, where we are right now. This is the 20-day moving average that I think will come up and support this price tomorrow or the next day up here, low 90s. We'll talk about that in a second. But if I go down to the 4-hour and I bring in the bar pattern, okay. All right, so here's the bar pattern. And let's get rid of this. We could find some support from back here in this price structure, or move it down to get a little bit more of these candles in here. So where would this be? 92,300. So another 1,000 down from here. But we are just going right back into this price structure that I was talking about. One thing is it could have been cut short. So instead of making it all the way out here into, what is this, late December, I was thinking something like this. So we'll see if that occurs. But overall, this is extremely bullish consolidation. Okay, we're consolidating as price is going higher, which is incredible. All right, let's go back to the report. So that was that one. MSTR and the ETFs continue to suck up Bitcoin, minimizing any dips in price. Without these buyers, the rally to 99,000 would have had a larger correction than just 95, and it is going down 93 now. But I'm thinking we could have hit all the way back down to 74 and retested those levels, because historically, Bitcoin does these 30-40% corrections during the bull market. This could have been one of those 30-40% corrections from 100 down to 70. Okay, but I don't think we're going to get anywhere near that because of this buying pressure, the constant buying pressure of the ETFs and MSTR. So below is the 20-day moving average, currently at 89. At the rate that it is rising, it will be over 90K tomorrow and as high as 94 by Thursday, Thanksgiving. This would be nice support to bounce off of as Bitcoiners get bombarded with questions by friends and family. So there you go. There is a trend line here as well on RSI. but this is the 20-day moving average, and that would be a nice place to find support for this any little dip that we're having right now. So I think Thanksgiving could be a big day for a reversal into Friday's end of month expirations. My base case for this week remains consolidation, sharing characteristics with the October 2023 pattern. So slight rising consolidation. Support has come into the market. What did I want to say here? This is a bad sentence. Support has come onto the market. Supply has come onto the market due to the 100K level and has been demolished by massive buyers already. The next test of 100K will have much less resistance. The end of the month might allow some stiff resistance to roll over to a more favorable position, making 100K less important to defend as well. Okay, so that another thing. So this 100K, there's a lot of activity around this. Psychologically, it was a flashing shelling point for activity, a lot of OGs selling, et cetera, et cetera. And so this is being defended. Supply is coming on the market, but that supply of those OGs selling, people are saying, I'm going to sell when it gets to 100K. And they see 99.5, and they're like, I'm selling. Okay. Those guys don't have any more Bitcoins to sell, or they don't want to sell anymore. They've already sold. And so next time we get to 100K, we're not going to be dealing with that. We're not going to be dealing with that supply that's coming up from that. Also, with the end of the month rollover, some of these guys might be defending some of their longer term contracts. They don't want to get liquidated. They want to actually close in some sort of decent position or roll over to next month. Okay, so they can start doing that already, but by Friday, they have to roll over if they are going to roll over. So with the lack of all of those all those sellers and the lack of maybe strong resistance from contracts that have to be settled around 100,000, going into the end of the week and into December, there's not going to be as much resistance at 100K. That's what I'm trying to say. I think I explained that all right. All right, so end of month, stiff resistance rolling over. A breakout could happen this week, but it is much more likely to occur next week. And that's exactly what I said. I just left that sentence in from week to week. So it could happen this week, but I think it's, again, more likely next week to happen. So that's all I have for price. Let me check comments here. Dex Invictus back with us. What's up? Are you the kind of person who says to just always buy BTC no matter the market price, or to wait for dips, etc.? I prefer to just DCA, but I am not an expert at all. Well, Heat Proofed, welcome. I'm definitely a DCA advocate, but yes, if there are big dips, I mean, one of the things is, if there's a 20% dip in Bitcoin, it's probably a good time to buy. If there's a 40% dip in Bitcoin, it's an even better time to buy. So if you do your DCA, but you leave some dry powder, right, then you can really buy a larger DCA chunk on the 20% dip. Now, I think that's logical. A lot of people might not want to worry about it all that much. They want to set up their, 20 bucks a week or $100 a month or whatever they're doing and just let it roll. And that's perfectly fine. That's a winning strategy as well. I used to trade and don't really trade Bitcoin anymore for multiple reasons, but there's like, with all these more high-tech options, it's going to be much more attractive to maybe trade some options, get involved with futures and stuff like that. But as of right now, for me, it's Bitcoin cold storage only. All right, let's go on to, let me check Telegram real quick. All right, no comments in there. Let's continue on to mining sector headlines. Proposed climate change on crypto mining, but really Bitcoin, because who else is mining? is gaining momentum. It's not really gaining momentum. All right. They just brought this up in the UN. There are still some crazy environmentalists out there who refuse to learn anything. This is a quoting from an article that I linked in the bullet point here. A tentative proposal to tax Bitcoin mining to raise funds for climate action took off during a United Nations climate conference that's set to come to a close today. The idea is that the climate tax could reduce emissions by incentivizing mining firms to clean up their operations. Bitcoin mining is zero emission and could provide desperately needed funding to help less affluent nations transition to renewable energy and adapt to the effects of climate change. There are swaths of the economy which are largely undertaxed, yet polluting the planet. Yet they have huge potential to close the climate finance gap, the report says. Um, Bitcoin mining is zero emission, the same way that EVs are zero emission. They do not produce carbon dioxide. These people are painfully dumb. Also, the Bitcoin mining industry is by far the most green industry in the world. 50 to 60% of the energy comes from renewable and clean energy. This is because it provides the very profit for many of these industries. Many of these renewable energies are now relying on Bitcoin mining. They're trying to kill their golden goose. This won't go anywhere. Just amazes me to see the debunked 2017 talking points still believed and used by people. Okay, next headline. Mining headline here. Crypto mining in Texas ERCOT region requires to report power demand. So this kind of looks bad on the surface, but here is from this article. Texas utility regulator has passed a rule requiring Bitcoin miners using the grid maintained by ERCOT to register and share key details about their facilities. Under the Public Utilities Commission of Texas rule passed on November 21, miners must share the location, ownership information, and demand for electricity of their facilities with the state agency. Miners have only one working day after the date of their facility connects to ERCOT grid to register and must renew every calendar year on or before March 1st. So some might see this as a pretense for some sort of Bitcoin mining crackdown, but I think it is in good faith. The authorities would like to have a detailed map of miners on their grid. That just makes sense. They already enroll most large miners in their voluntary curtailment program, um, and that works well for the grid and for Bitcoin miners. So if you're in this voluntary curtailment program, they already have all this information about you. Um, they're just trying to build a map of where the miners are in their grid, and I think it is in good faith, but everyone can have an opinion of that. Okay, hash rate and difficulty. Bitcoin's hash rate has been surprisingly flat again this week, with no catch up yet to the price spike, but it's still generally healthy. So you can see it's been flat. This moving average has been flat over the last week, but it is looking like a 3% difficulty adjustment next week. So nothing like the 30% price gains, but that will follow eventually. Mempool. Despite the spike in price to nearly 100K, the mempool has been generally quiet this week. I typically use the mempool to weigh the drama in Bitcoin. For instance, with the price almost breaking 100K and all the live streams, including this channel, I went live trying to live stream the breaking of the 100K, and that didn't work out. Tweets and excitement around the event. The network doesn't seem to have gotten all that excited. This wasn't the euphoric move that we, deep in the rabbit hole, thought it was. The real network activity is likely after the 100K mark. So here is a 3-month chart. You can see we had a little bit of spike, but nothing really super duper about that spike. It does, like if I told you pick out where 100K, where we hit 99.8 on this chart, you guys probably couldn't do it, or you guys probably could because you're following Bitcoin, but nothing jumps out at you that says, oh, this was a high demand period. So anyway, I stripped out the cheapest fee transactions to show the action this week more clearly. So you can see this is a 1 month of mempool. And again, I guess you could say it's probably one of these peaks, but there's nothing really spectacular about these at all. So what this tells me is that the 100K, the move to 100K was just the price getting drug up to 100K. Then it met that resistance and that new supply that we talked about coming onto the market, and it now has been pushed down. But next time we get to 100K and it breaks it, that's when we're going to see fireworks on chain as well as in price, is my opinion. So there you go. And layer two, nothing significant to report. I really didn't even search any layer two stuff. Nothing came across my feed this week that I noticed. So I don't have anything to report there. But if you guys have stuff that you would like me to add to this section each week, you can share it on Twitter or in Telegram. But anyway, let me go back up to the top, check comments, and then I'm going to be out for the day, guys. My son has wrestling here in a little bit. Okay. So Heatproof said, thanks for the advice. Yes, sir. All the insane taxation and wealth extraction by nations is going to send the world economy into a death spiral. Yeah. Well, if you're new to the show, my overall thesis is more bullish the United States. I don't think the United States is going to have a golden age per se, but it's going to, compared to the rest of the world, it is. Okay, so let's say over the next 5 years, 20 years, whatever the case, the US will struggle along, but the rest of the world is going to collapse or, turn into Greece, where Greece, their GDP has gone down like 25% in the last decade. That's going to happen to most places. But the US is going to stay stable. So the US is going to take a higher share of global GDP. That's the general theory here. And especially if we go to a Bitcoin standard, all of the capital in the world is going to flood here. That will be inflationary, quote unquote inflationary. Prices will rise, but wealth will rise faster. So that's what I have to say about that. Dick Larson, great show. Thanks, man. Okay, let me check Telegram one more time. Another comment, Larry Jr. Oh, Larry Jr. asked about the sell wall. So I'll share this tab. And this was what people were looking at. This is CoinGlass. You can get, this is their consolidated order book, and I have it on spot. Let me click in here so you can see. I have it on spot and USD, not Tether, just spot and USD. And then you can see all these consolidated order books. It's like Bitfinex, Kraken, Binance, Coinbase, most of the big guys. And yeah, you still see this big sell wall over here. It's about 1,000 Bitcoins, right at, what price would that be? 94 now. It's moving down, but it's getting chipped away. It got chipped away. I saw a couple $100 come off, a couple hundred Bitcoins come off of it, but a couple hundred Bitcoins could be some OG that's putting their orders onto the order book. So that sell wall is just kind of a conceptual thing. I don't think there's actually like a bear whale that is selling in 100K, because remember, bear whale comes from $300 Bitcoin, and somebody sold 30,000 Bitcoins at $300, and it just, that order went on the books until the people slowly chipped away at it. I don't think this sell wall is anything like that. It's just kind of notional, but good question. All right, guys, that's all for today. Let me go back to the website, bitcoinandmarkets.com. Join the free email newsletter. Thank you. Also, if you want to become a paid subscriber, support my work here, guys. I live stream as much as possible 3 times a week or so. I do a lot of written content as well. Also writing for Forbes. So your support of my website supports me writing at Forbes as well. And that's it. So thank you, guys. I'll see you on the next one. Bye.